one of the things we hear all the time is, well, I see where that would work if I was wealthy, or I see where that would work if I made a lot more money. No. And this is how you know this. Go back to page 17 and Becoming Your Own Banker. And Nelson says the world teaches us to focus on the 5 or 10% we're maybe saving for retirement.
The reason why Nelson did that, and he talks about it in the addendum, is because he didn't want the naysayers to go, oh, but you're having to borrow money in order to do that from the policy. No, he was taking straight dividend withdrawals from the policy in this example. So he said, if I were coaching someone on this, I would never tell them to do it this way, because the value of borrowing against your policy versus drawing down on it is substantial.
How to start building our own banking system. So if you're just now joining, we've been talking about Becoming Your Own Banker, written by Nelson Nash, and implementing the infinite banking concept. At a very high level, all that is taking where we store our money and the benefits it gives us and changing it from the traditional thinking to the fact that it can be done through a whole life policy with a mutual insurance company at a very high level.
Welcome to the Cashflow Legendz podcast with your hosts Nate, Brandon, and Brock. Remember, our insights are not direct financial advice, so consult with your financial team before making any decisions based on the topics discussed in this show.
All right, welcome back to Cashflow Legendz. Nate and I are stoked to be here with you today. We promise the younger, better looking, don't tell him we said that, Brock Fortner will be back, I think next week, and I can't wait for him to get
better
back.
Looking.
Well, he's younger, so
dude, you know how much I care about that statement. I'm just fun.
I'm trying to rub off some of your edges there, Nate. Hopefully he doesn't listen to this, because I don't want him to ever know that I said that tongue in cheek or not. I was really trying to aggravate Nate and
he won't
give Brock
listen
a hard time. He doesn't normally.
He's like, I say it once, we say it once, I'm not listening to it again.
Yep. But he's been at 2 different events the past 2 weeks. And so really excited. Nate, I'm even thinking, I didn't tell you this, that we'll just kind of Q&A him over the 2 events at our next time we have him on, if he's up for it.
Sounds good.
Because he was at the Lifestyle Investor and at his dad's event that's going on, Trent Fortner. So there's going to be tons of valuable things. We could probably do a whole run of episodes, truthfully, over what he brings from that. So today, Nate and I, are first going to start with gratitude. The opportunity that Nate and I have to do this every day, basically hitting record to do something that we love, believe in, live, I hope never bypasses our awareness of what an awesome God it is that we serve, and that we even get to do this.
Humility as well.
Yeah. And
Lord, let us not be too proud.
100%. I said this yesterday, and I really mean it. We believe that we all have the ability to do work that can be worship for the Lord's kingdom. And I'm beginning to really see, Nate, through God's grace and patience and mercy, that it all really has to do with helping others. Simple as that. And if people get confidence in how money is working in their life, almost always, or very often, they have a desire to give more than they receive. But they don't know that because they're trading time for money and they can't see straight. And so that's what we love to do about what we do.
You think about it this way, like, how often do you hang out with people who consistently talk about purpose? Mm-hmm. I mean, it's not a topic of conversation a lot of times, especially among men. But what we have seen over the last few years is, as our focus has switched, our focus has changed, the men around us are starting to be impacted by that. And so we have conversations every week around purpose.
And Nate, I think it's important to bring up the point that we have become more and more aware by God's grace and patience and love, and accountability and discipline. Let's be real clear. That has been needed many, many times, that men are supposed to make each other better for his kingdom. And we're all individual body pieces of Christ, body of Christ, but we all, when we come together, make the body of Christ stronger. So that could be faith related, that could be family related, that could be fitness related, that could be finance related, but it all comes back to we were created for something much more than just punching a time clock. And that's what we love about what we get to do, is we get to encourage people to lean into that. So today, Nate, you and I are going to break down.
Yeah, all that was for extra credit.
Yeah.
So we're not going to charge you for that part.
That was free. We're going to break down page 41 of Becoming Your Own Banker, which it goes to 42, 43, and actually 44 and 45, and a little bit further. But we're going to break down where Nelson said, and this is a key piece, how to start building our own banking system. So if you're just now joining, we've been talking about Becoming Your Own Banker, written by Nelson Nash, and implementing the infinite banking concept. At a very high level, all that is taking where we store our money and the benefits it gives us and changing it from the traditional thinking to the fact that it can be done through a whole life policy with a mutual insurance company at a very high level. It's that simple. So what I love about this, Nate, we reread it recently, actually, before we hit record to refresh our memory. And there are things that Nelson says that are such a blessing to my thinking and your thinking. And we do this every day, 8 years in almost, and it still benefits us to go, oh, that's what he meant, because we've experienced this, and this now. So we have more connection to something because we've experienced it. So before we show kind of where we are, so if you're a podcast listener, we're going to show a few things on the screen. So encourage you to hop over to YouTube. What Nelson
buy a copy of Becoming Your Own Banker.
Even better. Even better. I wish I could tell you that somebody did that in Nate's ear, like on a news station, but that was purely him. That was impressive.
No producers here.
No producers here. So Nelson is trying to get us to realize, Nate, what banking is. And at a simple level, if I had to go back and teach you and I think I would say something like, where do you make your deposits, or where do you store your money? Is that fair? You think that'd be a good place to start for no
yeah,
context?
for sure. And really the idea with banking is control of flow and creating a positive result with that flow.
Yep. And so what Nelson spends the whole first 40 pages of Becoming Your Own Banker out of 92 is realizing that behavior and what's really going on emotionally, psychologically with where we deposit money. We need to be aware of that first, so that then we can start building and taking over the banking function in our life. And very, very clearly, I want everybody, if you hear nothing else, to hear this. Our money, our deposits, our wealth, our money earned, our income will have to stay somewhere. It will have to be deposited somewhere. It will have to flow through somewhere. Doesn't matter where it is, under the mattress, in the backyard, buried in a chest, in a CD, in a 401k, in a savings account, in a 403b. There are not many when you really think about it. Those are places that our money sits or resides, as Nelson would say. What Nelson wanted us to realize is that whole life insurance just happens to be the best place to build a bank mindset system operation for our money. And he proves it in this section of the book when he says this is how you build it. And there's a piece he says, Nate, a couple pages into this section that I liked. Every time someone starts a new policy, which just requires an application with the insurance company, key piece, a mutual insurance company, he touches on that, they're starting a new business. And what he's trying to get us to understand is that the only way we can take over banking in our life long range is to start businesses that allow us to bank or control banking, which can only be done through whole life insurance. And that's what majority of people miss, is they think about whole life insurance as a product only.
Yeah, and it hits both principles right out of the gate, which is think long term and don't be afraid to capitalize.
Absolutely. And he makes a very good point. He's like, banks, when they receive a deposit, that is a liability on a bank's ledger sheet. Okay. The asset is the loans they have outstanding. And that, Nate, the first time I read that, second time I read that, fifth time I read that, I was like, what? Because it makes our brain hurt, because we don't walk into Chase Bank or Chase Bank's eventually going to probably put a cease and desist on us, because I use them a lot as an example. We don't normally walk into any major branch and they go, hey, let me educate you on how we make money off your deposits. And so Nelson's just trying to make us aware that you can create a banking system. It just takes time. And what he's saying is that those large banking institutions that we know that we make deposits in currently, the traditional banks, he's saying nobody talks about what it took for them to be able to do banking. Nobody ever talks about that. They didn't just wake up and go, oh, I want to be a bank. You can't just go down to the corner and go, this is where my bank's going.
Well, and the thing about it is, like, banks don't make money just by you giving them deposits.
Yep.
They make money by having a place to send it and go put it to work. And so when you deposit money with a bank, they use your money to create cash flow for themselves.
Yep. And so this is just kind of a high level. What Nelson was trying to get us to understand is that we can continue to put our deposits in traditional banks only and be used by them, because he makes a very good point that in those situations, there are stockholders of the bank that are receiving all of the benefits that he shows in this example of different ways to build your system. And then Nelson uses the example of financing cars. And the reason he does that through your banking system is because he wants to start simple. He wants to connect the dot that there are going to be things you're going to buy over your lifetime, whether cash or financing to, financing company in traditional senses. And he wants us to see how we can do that in our own life. So it gives an example of over a 44-year period, 11 vehicles being bought for the same price of $10,550. Now, for all of you naysayers who love to punch holes in anything, we understand that cars are not $10,550 nowadays. We also understand that you may not buy a new car every 4 years. You may buy it earlier than that.
So
you may buy it later than that.
Add a zero.
Yeah, add a zero. It doesn't matter. And this is the key piece that took me a long time. It doesn't matter what the numbers are. It matters how much of the banking process we are controlling. So if you want to control more of it, add zeros. Like Nelson said, if you want to control less of it, peanuts in, peanuts out, which is right back to his principle of don't be afraid to capitalize. So we're going to show you the chart real quick for those watching on YouTube. This is what Nelson shows at a very simple level. There are 5 methods of us that we can use to finance an automobile over a 44-year period. Nate, I'm going to go through each one of them just at a high level so those listening can know. Method A is lease method. Method B is banking method. Method C is cash method. Save up cash to buy it. Method D is the CD method, which is CDs at a bank where you can put money and keep it there for 12, 18 months.
Of deposit.
Certificate of deposit. And then method E is the IBC account method, which is the IBC approach is just a mindset and a behavior that's talked about inside of becoming your own banker. And that's where we're using the product of whole life with a mutual company that's paid dividends for 100 plus years consecutively for the process of controlling the banking function. So Nate, at a high level, walk through these, and then Nate's going to do some, for those of you that love math, at some point, he's going to show you some math, but I'm going to get you fired up real quick for those who don't know and don't practice this yet. And I said, yet, the math don't matter until you understand why behavior is so important. And that really gets people fired up who've only ever believed that rate of return is the most important thing. All right, Nate, I'm going to take this off the screen if you're good with it, unless you want me to leave it there.
Yeah, so these are the 5 different ways that you can acquire a vehicle, and these are legal ways. We're going to leave out Grand Theft Auto for the sake of this example. But first option is by far the most expensive, is when you lease a vehicle, and you're essentially just renting it from someone else who owns it, and they're not going to be losing money on that deal. They're going to be making a profit simultaneously. Second option is borrowing or financing at a traditional bank. In this example, you still end up in a negative cash position. The third option is the cash option. So notice in all 3 of these examples, they're all below the $0 line. So let's look at some better options. The fourth option is the CD, certificate of deposit at the bank. And what that does is it puts you in the positive $200,000 range. But what if we could become the bank and take control of both sides of the equation? So in this last example, this is the CD example, and you'll see how you could have 900,000. And so since the CD and the IBC options are the only positive cash positions, we're going to look at those side by side. And this ties into table 1 that's right there in the book.
Yep. Hey, Nate, let me add something real quick.
Yeah.
Nelson makes a very good point that 80 to 90% of everyone is operating in method A, B, or C. Almost everybody thinks that cash is better than financing, the bank method, and few people use the lease method. But what his point is that more and more people are running to the bank and the lease method, even though the cash method keeps more money in your pocket. So you have the cash mindsets, which I was for a long time, that says this is the best way. And here's the cool thing, Nate. It's the best way because it's all that we know at certain points in our life. So bravo if you're a cash person. This will just make you better.
Yeah.
And this is the beauty of it.
Let's just bring into the conversation the key principle in understanding the infinite banking concept is you finance everything in your life, whether you're paying cash for it or not. And if you read in this section, Nelson talks about this, you're always making payments somewhere. So when you're making payments to the bank, you're making structured payments to the bank. But when you're saving up and paying cash, you're making payments to yourself for a future purchase. The other side of that is you could pay cash, but you're always giving up opportunity costs when you're paying cash because your money is not sitting in the best environment possible. And so in Nelson's book, pages 45 through 47, he uses an example of 2 21-year-old twin sisters. And one of them is going to be leveraging CDs and the other is using the infinite banking concept. Now, both sisters, they start by equally contributing $5,000 into their respective systems. And when you look at this table, you can see at year 7 that the CD sister is a little bit ahead, but both sisters have accumulated or have access to more than they contributed. So,
all right, Nate, let me stop you real quick. If I would have heard all that right when we started, it'd blow my mind. So I'm going to say it this way. Nate and Brandon, each for 7 years straight, Nate deposited $5,000 into a certificate of deposit at the bank, and I paid $5,000 in premiums into a whole life insurance policy with the mutual company. and now you're breaking down those numbers. Is that correct?
Yes, exactly.
Okay.
Yeah,
Keep
we're just
rolling.
kind of isolating these two examples
Okay.
so that people can kind of see them side by side. And again,
Yep.
if you don't have a copy of Becoming Your Own Banker, highly encourage you to grab one because you'll be able to see this for yourself.
Yes.
I think, well, we'll get to this at the end. So in this table, in year 8, they decide to borrow against or leverage their accounts to buy a $10,550 vehicle. But they also want to be good bankers. So they set up terms for themselves of around $256 a month. And remember, money always has to flow somewhere. So at year 12, they decide to trade in or trade up. So they borrow another $10,550, and now they have a few more features or a better model than they could have afforded before. But they continue to be good bankers and make that payment back to themselves, $256 a month. Something magical happens in year 15. And you can see this right on the page. The infinite banking sister overtakes the CD sister, and it only gets stronger. But we've only done 2 cars at this point. So let's fast forward all the way down to year 48. So what you'll notice is that the total deposits for both sisters is the same. So if you factor in the total cost of their vehicles, they spent $116,050. And so if you subtract that from their total net cost, their total deposits of what they put in their systems, their total net cost was $52,270. So you can see the comparison in retirement income they both have accumulated with their systems. The infinite banking sister wins by over $700,000. You can see this in the table. So the question is why? And the answer is actually really simple. When you're the bank, you get the dividends. You get the dividends that others would not ordinarily get to participate in just by being a depositor at a bank. So let's make it more fun.
Hey, stop right there for a sec.
All right,
Catch
let's
another piece.
stop.
Okay. So Nelson talks about the characters in a play, and he refers to banking as a play.
Yep.
So when you read Becoming Your Own Banker, you will hear him reference this. And we have been taught to believe that we can only be the depositor and the withdrawer in the banking process. Now, I want to be clear because this gets missed a lot early on. We cannot get rid of traditional banks, but we can use them to create our own banking process with a whole life policy or policies with an insurance company, and the banks become our pass through, if you will, that we use them and their tools for our benefit. And so when Nate says that these things are occurring, he's wanting us to be sure that we understand that our money's got to go somewhere still. So we can't get rid of banks, but this is where a confusing piece is. There's traditional banking where we've always deposited our money, written checks out of a checking account, saved money in a savings account, put it in a certificate deposit. And then Nelson's like, why wouldn't we want to create something that is similar but has more benefits for us? And the only place that can do that effectively over long periods of time with long range thinking, even though you can use it pretty quick, is through a whole life policy. So keep going.
All right. So this will touch on something that we get questions a lot, which is, could I use my whole life insurance policy as a retirement vehicle? Nelson actually addresses that in the last section of this table. So we're going to make it a little more fun because, who likes the idea of running out of money at retirement? I have seen too many people who retired and became crippled by this fear. The reality is most people are afraid to spend too much when they're working, and then they're afraid to spend too much when they retire. And really, what kind of life is that? And Brandon, there's this great little analogy that we use, and I don't remember where we heard it, but it's this water bottle right here that I've got in my hand. So imagine you get stranded on an island. It's a deserted island. As far as you know, you've searched and you're there by yourself. So there's very little resources available. But you find this bottle of water in the sand. How do you know how much water you can drink in order to survive on this island?
I don't know how much water I can drink because I don't know if I'm going to ever get rescued or not.
The danger for people in retirement is longevity, living longer than their money. And so this is the conundrum that so many people have in retirement is they've accumulated to a certain point, and now they're in this protection mode, this scarcity mode, where now they've accumulated, and some people have accumulated a lot of money and they're terrified that it's going to disappear tomorrow. Like there's so many different variables that you have to take into consideration. So nobody likes the idea of running out of money. So how can we make sure that we don't? Well, one example that Nelson talks about in the book. So both sisters are going to pull out $50,000 a year for retirement. In the middle of year 6, the CD sister runs out of money. But the IBC sister, IBC sister continues to pull $50,000 a year, and her money continues to grow. And then Nelson has her pass away at age 85, and she passes on over $1.3 million in death benefit to the people that she loves and cares about. And I don't know about you, but when I learned about this, I got a little bit sick in my stomach thinking about all the vehicles I had bought. But I also got really excited because currently I've got 4 vehicles that I own. And the cheapest one that I have right now, I paid $20,000 for. That was my son's car.
Mm-hmm.
So I don't drive $10,000 cars. So let's just pretend for this example that it was 2 $10,000 cars. Could she have pulled out $100,000 a year and passed on $2.7 million to her family? What if it was 2 $20,000 cars? Could she have pulled out $200,000 a year in retirement and passed on $5.4 million to the people she loves and cares about? Now, we're just talking about cars. So I want everybody to just dream real big for a moment. What if your house, your vacations, your businesses, your student loans, your boats, your motorcycles, anything that you can think of, what if it was all wrapped up inside of your banking system? What if you controlled those terms? You controlled that equation. How fast would your money grow if you became the bank? It would blow up. And think about what kind of legacy you could pass on to the next generation.
Hey, when you say those kind of things, if you're hearing this for the first time or even the 5th time, or maybe even the 10th time,
I don't know how many times I've heard it, and I still get excited about it.
Man. But there is also all these doubts come in, and what we continue to learn is that if you have doubts on something that you think could better your life, your goals, your priorities, your values, what's the downside of leaning into it till you no longer have doubts? Because if we are told something could better what we're already doing, and we choose to ignore it, that logically doesn't make sense. So then we have to go, if I'm choosing to ignore it, why? And what you and I have found often in our own journey, because learning never stops. One of Nelson's favorite words that he used, one of mine that he used, was ruminating, which means I'm always thinking about things I don't know, learning new things. But you and I will continue to experience new things we didn't know were possible because how much we leaned into things that we didn't know were possible.
We experience that today, and we experience it almost every time we read Becoming Your Own Banker, because at the end of this section, there's an addendum. And this is something that neither one of us had ever talked about before because neither one of us picked up on it until today. That example, that table that he is showing dividend withdrawals from the policy, not policy loans, which means this is a super conservative example to what's actually possible. Because the reason why Nelson did that, and he talks about it in the addendum, is because he didn't want the naysayers to go, oh, but you're having to borrow money in order to do that from the policy. No, he was taking straight dividend withdrawals from the policy in this example. So he said, if I were coaching someone on this, I would never tell them to do it this way, because the value of borrowing against your policy versus drawing down on it is substantial.
Yeah. And what Nelson was doing, remember, we have to remember, Nelson wrote this book, it's his words, for the average Joe. Me and you, Nate. Two guys from East Texas that graduated from a 2A, 3A high school with less than 1,000 kids in it. This can work for anybody. One of the things we hear all the time is, well, I see where that would work if I was wealthy, or I see where that would work if I made a lot more money. No. And this is how you know this. Go back to page 17 and Becoming Your Own Banker. And Nelson says the world teaches us to focus on the 5 or 10% we're maybe saving for retirement. Now, 5 or 10, maybe. The average savings rate is 4%, depending on what you look up. But let's just say it's 10. We're trying to save 10% of our annual income for our lifetime and make it grow enough to support the last 20, 30, 40 years of our retired lifetime. That logically, out loud, on paper, numerically, does not make sense. Something has to change. Either we have to save a whole lot more, or we have to take a whole lot more risk while saving a whole lot more. So something's awry about that. So then he says on the other side of the chart, automobiles, housing, living, that's the other 90 to 95%. Why wouldn't we think about creating a system that could get a guaranteed benefit off of all those dollars flowing through our life over our lifetime? Now you're not worried about chasing risk on the 5 to 10% you're trying to save. And when that began to click for me, Nate, I'm getting excited about it right now, 8 years in. The excitement also leads to accountability, Nate, because don't let anybody fool you. Nate and I still struggle with unlearning because the entire system has been built to automatically make it easy for you to practice in traditional banking because of how profitable it is for the people that created it. And we call these the rules of the game.
Yeah, you're talking about people, not really knowing where to start. We get this every now and then where people are just like, I don't really know where I would start with this. And I'm going to tell you, we started where we could start. So when we started our company, Unlimited Life Concepts, not after we had a little bit of money coming in, not much, but a little bit of money coming in, we decided that we were going to start business policies. We were going to start policies inside the business. Brandon, those policies were $500 a month for our business. That's where we started. But now we have 7 policies inside of our business that we pay a lot more than that in premium.
I'm going to challenge your words, Nate. When somebody hears pay, they freak out.
Deposit.
We have the privilege, and we can't take. The insurance company doesn't call it a deposit.
Right.
They call it a payment, and that creates confusion too. Keep going. Sorry, bud.
Yeah. So you start where you can start. And if you ever are wondering, or you'd like to get some second set of eyes on your situation, we have coached our friends and our family members on this over the years. So if you come to us, we're going to treat you like a friend or a family member, and we're going to tell you exactly what we would do and what we would tell our friends and family to do.
Mhm. And, on that note, Nate, and I know we speak for Brock as well, we don't look at this as a job. This is a privilege that we have to share information that's blessed our life, our families, our friends, our members all over the U.S. We look at it as an opportunity to be great stewards of information that most of us aren't exposed to. We weren't either. And luckily, we had two mentors to start, Mike Everett and Chris Bay with Life Success and Legacy, who took us under their wing and said, let us show you everything that we've learned, that we do, that we teach, and we live. And what we've learned, Nate, is that this mindset and system is much more forgiving than the model we were in that everybody said you should be in. Why? Because you and I have more and more and more control and guarantees, getting the risk factor closer and closer to zero without having to ride the waves that were created by design. Now, that's us. Had a conversation yesterday. Someone who's been very, very successful in the market consistently. And I think there was kind of an aha moment in our conversation that taking whole life insurance and protecting your income earning potential, which is how they come up with the death benefit, allows whatever else you're doing to be more sound. Because when I told him, hey, what's the most dangerous thing related to market return when you're ready to pull on it for retirement? He said, in a down year. I said, so what if you had an environment of money that you controlled where you didn't have to pull in the down year and you could let the market recover? He's like, man, that would be great. I said, what if that place was growing all the time, guaranteed because of the choices you make today and for the next 10, 15, 20 years? That'd be great. So there's really not a competition here. It
Yeah, in
will
the
make
financial
whatever you're
world,
doing better.
that's called a volatility buffer.
Yep.
And so you talk to most financial advisors and they will tell you about the value of having a volatility buffer. But rarely will they teach you about whole life insurance. There are some good advisors out there that understand whole life insurance and that advise their clients to use it to pair up and complement the things that they're already doing.
Mhm.
But it's rare.
Yep. And Nate, on that note, because we get asked this a lot more often here lately, for those traditional financial advisors that are friends of ours that or acquaintances that know and do that, they actually say it makes their financial advising business better. Why? Because almost everybody would not choose risk portfolios as their highest priority if they didn't have to. If you could guarantee protection of certain things to create a guaranteed income plan, kind of like the old school pension plans, which are almost non-existent now, you wouldn't chase risk. The only reason most people chase risk is because they think they have to. And that's probably one of my most favorite things is you can show somebody how 90% of the money is leaving your life now by design. And you can start controlling 5% of that 90, 10% of that 90, 20% of that 90, 30% of that 90. And I'm talking about for a lifetime. Then you quit worrying about trying to get a great rate of return in an area you don't control. Because the greatest rate of return, like Nelson said, and the most profitable business in the world is banking. We just have to be willing to think long range and not be afraid to capitalize to create that system.
Yeah, your efficiency of capital is really where control starts to grow and expand.
Yeah. Nate, one of our earliest C-Dub, one of our earliest buddies and ULC members, and he probably started paying premiums, understood the privilege of it because he dove into Nelson. He did his own homework. He went down the rabbit hole and came back as an in-depth number crunching engineer, and he'll tell you the numbers don't matter. So when he says it, I believe him because he understands numbers at a level I can't get to. But he said last night, he referenced yesterday, I got to visit with him, he referenced that Nelson was so wise, and that even if we're just accumulating capital, which is paying premiums to an insurance company that we've been approved to do so, that allows us more peace of mind to take action for the next season of life if we feel one coming. And what we're really describing and what we've experienced and what we're learning is that control for more choices allows us to live a more peaceful life. Most of the system is created where we have no choice or only one choice designed not for our benefit first. I mean, think about it. I'll use teacher retirement system. I love teachers. I love educators. I want to help all of them that want to be helped. But you don't have many retirement choices. You're told what to deposit for savings in the TRS retirement system in Texas. It's that way for a lot of states. You're told what rate. You're told how long you have to work. You're told you have to work these places if you want to increase your retirement percentages. And you're told these things could be changed by the people that created it, not us, because it has been changed before already. That's not peace of mind, Nate. So what if you get to the point when you're 42 and you've got 2 kids that are under 12, or 32, 4 kids that are under 10, and you want to be home with them more? And you have the only choice of quitting teaching to get some money and pay all the taxes and all the rules, if you don't know what we know, or you stay in the job and you're miserable because you're sending your kids somewhere else every day and you're only seeing them at the end of the day. And if you're a teacher who loves what you do, you're stinking exhausted because you're working nonstop for other kids. And Nate, this goes on all through every profession. It's not just teachers. It's bankers. It's multi-million-dollar entrepreneurs. It's us. It's all these things that you see the system and you go, there's a better way. Am I willing to lean into it? Got me on my soapbox. I'll get off of it.
That's probably a good time to wrap up.
Yep, I agree. So if you've not read Becoming Your Own Banker, it is the greatest $25 investment you could ever make in your learning. What we encourage is read it pretty quickly the first time, write down questions you have, try to answer those questions with your current level of thinking, and then bring your next questions and hop on a call with Nate and just go, hey, what have you learned? This is where my questions are right now. What do I need to know? What am I missing? And it varies, Nate. Some people hop on and go, how do I get started? What's the next step? Because it clicks. Some people go, hey, I have this gap in thinking and I really want to lean into it. If you want to learn, we will teach you. If we're a good fit, we will teach you as much as you want to learn. And that is a privilege that we have. We don't consider it a job. All right. I've had a job before. This is not a job. This is a purpose. All right. So we hope that blessed you. We hope that was a benefit to you. If it prompts any questions or any conflict, put it in the comments. Send us a message. Send us an email. Remember, you can find all of our information at Cashflow Legendz with a Z.com. You can also find how you can contact us there. If you comment in YouTube or any of the other areas, you can do that or share it. We'll see that as well, and we will respond back to you. But we hope that this made you think about how you think. It made you question, am I thinking long range in the right places? Am I capitalizing in the environments that benefit me, my family, my priorities, my generational thinking the most? Or could I evaluate where I am and lean into seeing if there's something that could be better? Have a blessed day.